We have talked about Aster very early on this channel, when the price was still at 60 cents, now we are closer to $2. We talked about the fundamentals, we talked about the backing, we talked about the adoption of the platform, as well as a potential price target. This video is different though. In this video I want to talk about what platforms like Aster have an impact long term on the crypto space. Because here's the thing, perpetual futures platforms like Aster do have a lot of benefits. They reduce trading costs, they've got very small slippage, they also tend to reduce gas fees, they tend to increase capital efficiency through the use of leverage, but they also have massive dangers, unfortunately. Let us step back a little bit and have a look at other asset classes. This here is the Dow Jones Industrial Average, and the largest crash we have ever seen was in the 1930s. This was the Great Depression, when stock prices fell by almost 90%. Here we've got the housing crisis, where the average price of property in the US fell by 21%. And here's the total value locked in decentralized finance. So how much capital is on various DeFi protocols. In 2021, we had DeFi summer. In 2022, we had the massive deleveraging. Now, what do all of those crashes have in common? The answer is that with the progression of a bull market, people tended to get more and more risk on. They tended to take on leverage, they tended to take on debt, and then at some point when the volatility was too high, we got a deleveraging event and a lot of forced selling. That's what happened in the stock market, that's also what happened in the housing market, and it's also what we saw in decentralized finance with the Terra Luna collapse. The implosion of the Terra Luna protocol and the depack of the UST stablecoin, which was inherent leverage, right? The UST stablecoin just got minted from a cryptocurrency, it was inherent leverage. The deleveraging of that stablecoin caused an entire contraction of the market. This is the stablecoin market cap in crypto over time, and it took 1.5 years, so from May of 2022 to October of 2023, for the panic to finally resolve and for money flowing into the market again. We are now still in an expansionary period. Money is getting into the space. But you might get an idea of what I'm getting at here with this video. We've discussed Aster very early on this channel. There's already 4 videos. This is video number 5. And the very first video that was over here, more than 7,000 people watched the video, and I hope that you also benefited from that content. Again, at the time we were at 60 cents. Now we are close to $2. The problem is not necessarily that we are close to an all-time high in the total value lock. It is okay for decentralized finance to grow. And it's also okay that the decentralized exchange trading volume is growing with it. It's now even higher than what we had at the peak of DeFi summer. But here's something that's potentially dangerous. Aster is a perpetual futures exchange. So we are not trading any crypto assets, we are trading bets on an asset. And the trading of those bets has exploded. It was only at around 3 billion or so per day at the peak of last DeFi summer. And now we are close to 100 billion per day. Things became so serious that Hyperliquid, the largest of the perpetual futures exchanges, has now almost 3 times the market cap of Uniswap. Uniswap being the leading spot exchange across various blockchains. And so CZ of Binance is becoming proactive, as he had been when he created the Binance Smart Chain, right, a competitor to Ethereum, together with PancakeSwap, a competitor to Uniswap. Now we've got Aster as the competitor to Hyperliquid. What we see over here is the relative valuation of Aster to Hyperliquid. And I do think that there is at least an additional upside potential of 32%, probably much more. A lot of the recent trading volume on Aster is pushed through the airdrop. The airdrop gets advertised by this animated button, but really the problem is leverage. Aster offers 1001x leverage. Now, of course, the usage of that leverage is rather gambling than investing, but that's not the main point. The main point is that now over time we see more and more risk acceptance in the market. We now have 1000x leverage platforms that are serious, that get real backing by Binance. Where is all of that leverage going? Not necessarily into Bitcoin. What we see here is the Bitcoin price in yellow and the open interest in green. And yes, open interest did grow faster than the spot price, roughly 2 times faster over the last 4 years. But that's not too bad. What is bad though is the Ethereum leverage. The ETH price is at very similar levels to 4 years ago, but the open interest went from 11 billion all the way to 55 billion, so a 5x. Aster is mainly on the Binance Smart Chain. Luckily, the leverage in the BNB asset isn't as high. So this is Ethereum relative to Bitcoin. I do think there is a good chance that the ETH leverage will deflate, and that will then push ETH down relative to Bitcoin. Ethereum currently is much more risky than Bitcoin. I also believe that BNB has a good chance to outperform Ethereum, again by at least 63%. And that's because of the same reason. There's just so much leverage, especially in Ethereum. The long-term trend is simply concerning. Yes, Aster relative to Hyperliquid is still very cheap. Currently the trading volumes are comparable, and if Aster can keep the trading volume even after the airdrop, then it should outperform the Hype token by quite a bit. But let's not forget, during a bear market, prices can decline massively, even Bitcoin. Bitcoin doesn't have as much perpetual futures leverage in it, but still, even during DeFi summer, it went down by 73%. Maybe the next bear market won't be as bad as the former one, right? It tends to be less and less of a drawdown with every bear market. Maybe the next one will only be minus 65%. But again, that's for Bitcoin. Minus 65% would put Bitcoin at $42,000. But Ethereum could go down much, much more. Again, because of a potential deleveraging. We could see a secondary DeFi winter once people get forced liquidated, once people have to sell, as they had to sell their stock, as they had to sell their houses, as they had to sell their crypto during the last DeFi winter. What we see here in blue, that's the Ethereum price. What we see in green, that's the altcoin market cap. Just have a look at how much those two are correlated. When Ethereum delevers, when Ethereum crashes, it will bring the altcoins with it. And that's the big danger. Of course, Bitcoin can come down quite a bit as well, if history is any indication, but Ethereum and the altcoins have the potential to completely wipe out the capital. And this is, I believe, what most people overlook. Too many people get excited about the low trading fees and the high liquidity on perpetual futures, but not enough people are asking the question, what long-term impact does all of this hidden leverage have? If we see some volatility in crypto prices, then that leverage and the forced deleveraging will create much more severe bear markets. And again, Ethereum will be impacted most by this, and as an extension, the altcoins will come down with it. It might not happen today, it might not happen this week. Nobody knows the exact timing of the deleveraging, but when it happens, it's usually very, very quick. Now, there is somewhat of an argument to be made that altcoin season might be imminent. And so that's based on the others dominance chart. It shows how much of all of crypto in percent is currently in the altcoins that are not in the top 10. And this seems to bottom out at very similar levels, and it might have just bottomed recently. In the past, when we were at similar levels, the altcoins outperformed the rest of crypto by more than 300%. So I understand this argument, but there's a bit of a problem with the argument, because the other dominance measures the market cap, but market cap is a very different thing to prices. There's a dedicated website called Tokenomics AI that does nothing but measure the token inflation of various altcoins. So let's have a look at Aptos, for example, here at number 1. This is the Aptos price relative to the altcoin market cap. Since March of 2023, this went down by 88%. And the reason is an ever-expanding token supply. As there's more and more tokens hitting the market and supply is higher than demand, then of course the price has to go down, at least relatively speaking. This is the Aptos market cap chart over time. It's at very similar levels compared to February of 2023 at roughly 3 billion, so barely a change. But in February of 2023, the Aptos price was at $18. And now it's at $4.39. So this is how much impact token inflation actually has. The others' dominance does not look at prices. It only looks at market caps. But we do not get market cap returns. We get price returns. Market caps can be unchanged. Prices won't be unchanged if the supply just keeps on increasing. Now, how much of a problem is this really in the grand scheme of things? Is this just a few select altcoins, or do we see this on a broader scale? The answer is somewhat depressing. We unfortunately do see this on a broader scale. So each week we see roughly 1 billion worth of token unlocks. If we do not see at least 1 billion of additional demand coming into the altcoin market every single week, then the prices have to come down. The others' dominance might be unchanged, but the price of individual altcoins definitely do get negatively impacted. Aptos is currently the 42nd largest cryptocurrency. It's just an example. Let's have a look at the top 100 cryptocurrencies. In the last year, Bitcoin went up by almost 100%. We've got 26 out of 100 altcoins that did better than Bitcoin. 73 altcoins did worse than BTC. And so here's what I personally do. I'm simply just betting on bad altcoins to continue to do worse. So we can just flip this chart around. This is the Bitcoin price relative to the Aptos price. At the bottom, we've got the others dominance again. So the others dominance did not change at all in the last 2 years, right? It went flat while Bitcoin's price relative to the Aptos price appreciated by 400%. So this is really where I believe the alpha in crypto is. It's the market inefficiency of highly inflating altcoins. I'm following this strategy already for roughly 4 years. So I'm betting on poorly performing altcoins. I'm betting on them to go down further, while I'm betting on rising Bitcoin, Ethereum, and Solana. And because of that, I outperformed just dollar cost averaging into Bitcoin. Dollar cost averaging into Bitcoin is shown here as this light gray line. But I got the performance that's shown in the black line. So there is a way to beat the market without trying to find the few winners. We can simply bet on the market structure, on the constantly increasing token supply of many altcoins. It's maybe not as straightforward as just buying a single token. Some things have to be learned, but that's why I made dedicated videos on the topic. I try to make this as simple as possible, so there's really only 2 videos that have to get watched. The first video is using perpetual futures to bet on relative valuations. The second video is risk management with relative valuation bets. Once you've watched this 1 hour of content, you know exactly what to do to get this kind of performance, to set up positions like this. After you've watched those 2 videos and you've joined the community, I will send you my favorite trade that looks very similar to Bitcoin relative to Aptos. If with that trade you do not make money after 1 month of holding the position, then I will refund the membership fee to you. So those $125 are actually not what you're risking. If you don't make money with this favorite trade, you just get that money back. Just message me and I will refund you, no questions asked. Of course, besides this favorite trade, I will also share every single trade that I execute in real time as well. You can simply just copy trade me. A link to Premium will pop up directly on the screen over here. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe as well. I publish videos on YouTube regularly. See you next time on YouTube or see you in Premium. Cheers!